All right, welcome back, everybody. This is Kyle Bazzi, guest hosting for Joel L. Conan on Benzinga's pre-market prep, brought to you by our good friends at Charles Schwab. Just ask Chuck. On with me to close out the last portion of the show and into the open, Mr. Serge Berger, good friend of mine at thesteadytrader.com. Good morning, Serge.
Good morning, sir. How are you?
Not too bad, not too bad. Dennis and I, and kind of the theme this morning has been all-time highs here in the market, with just a ton of momentum behind it. What are you seeing right now, and what are you trading?
Well, I just got back from the coffee machine, and I just came back and I'm seeing a lot of red here this morning all of a sudden. I'm not sure if that has something to do with the Jewish holiday, if folks aren't around, or I'm not quite sure. But I think right now we really need to figure out if this pop that we had yesterday was really just a squeeze and we're going to go to lower highs and then you start going lower. I mean, the selectivity in the market on the equity side has gotten a lot more selective, right? So we've seen a lot of stocks kind of breaking out and then faking out right back down, and that usually when you see that kind of stuff, particularly in some momentum stocks, that usually signals at least the end for a little while, right? So that's kind of where I'm coming from here over the past couple of weeks, and I think with last Friday's pop and drop in the Dow and other places, you know this is definitely something to keep in mind, also from a seasonal and a cyclical point of view.
So let's talk about that real quick too. And you run a subscription service, a steady trader. And can you go a little over what your strategy is and actually your approach to the markets?
Sure. Yeah. I mean, basically, what I do, the way I run money and the way I run the Steady Trader Trade Alert service is very much through the lens of a sort of medium-term swing trading approach. I try to get away from the word trading because I think it's just people. It's become a bit of a curse word over the past years. So it's really more of an active investing approach, for lack of a better term. And what I focus on is stocks that really that we can all understand, that have a lot of liquidity, that have a lot of news flow that we know roughly when they comes. So, you're talking about your Googles, your Teslas, your Apples, your some of the biotech names, Twitters, Facebooks, all that kind of stuff, stuff that we can understand to the most extent. That's liquid and trades very well technically as well. So we don't have to wake up a morning and face the stock down 50, 60, 70%. I just ran a webinar last night and someone came up with a penny stock and I just had to chuckle a little bit because, he asked me, what happened to the stock and it was like cut in half. And, I told him, listen, as, as much as that's unfortunate, that's exactly the kind of stuff that happens when you dabble around penny stocks. And that's, I think, over the long run, if you're in this business to make money and not just sort of not just for kicks, then I think it's really better to stick with stuff that's liquid.
All right, let's go over some of these stocks right now. We covered the biotechs and the Facebooks and the Apples. I actually was on that webinar with you last night, and you mentioned on there, and we'll share it with the group, you just made a trade into Facebook. Can you walk us through that trade and the rationale?
Yeah, if you could bring up the chart there, I think I'm looking at the right thing. If Facebook basically just has had a series of higher lows coming off of the late July low, and then really what happened is it gapped higher after earnings on July 24th, and I think that really was sort of the big momentum rush that the stock needed to start really kind of basing at new highs. So if you look at that chart, that little up gap there, yeah, you can kind of point to it. That's really kind of took the stock to fresh all-time highs and kind of bumped it back above the March top. The stock then started basing in a very constructive manner. And if you zoom in a little bit on that chart, go to you see when the September 15th, September 16th is. Yeah, a little bit to the right. September 5th, that's where you have that sort of, 1 day down move on September 15th, which was basically just people freaking out over some of these social media stocks ahead of Alibaba. I'm not sure. The very next day, it bounced right back and that pretty much right at the 50-day moving average, and that's been enough to get that stock back higher and really coiling up despite the market's sort of few day drop here. So relative strength is really what you want to look at here in this market, and that continues to play out. Other places like biotech yesterday marched to new highs. The banks are still holding in there, kind of going back to support levels. So there's stuff that's working. I just think, going back to the point from before, there's the selectivity has certainly increased.
So let's talk about, so when you entered the trade on Facebook, you're setting hard stops, or are you using the mental stops? We talked to Harlan earlier, talking about the
Mm.
mental stops. What is your strategy?
I mean, I think it's somewhat a personal thing. I will tell you, after having done this for 15 years professionally, and I've come across just about every personality you can come across when it comes to trading, I find that it's for most folks, I found it's much easier to have a hard stop, at least to start off the trade with, right? So in this case, Facebook, let's say I think I bought it somewhere around 77 or something like that the other day, or 77.50. I don't remember exactly. And the stop would be somewhere around, let's say, 75.80 or something like that, whatever the lows are there from the other day, right? So if you're working with a hard stop, you know, if you have a mental stop, you're risking a lot. I mean, you're basically telling yourself, even if I go to the coffee machine and back, nothing, absolutely nothing can happen, and I will still get out of that at the stock. What if in that period of time, some sort of news flow came out, which in a stock like Facebook it shouldn't, but it can happen. You come back, a stock's down 5%. Well, that's great, right? So where's your mental stop now? So the real stop, the hard stop would have stopped you out at least at a moderate loss, whereas now you're dealing with a mental stop that's going to be much more difficult to work through. So I work with hard stops, and then I raise those stops as the stock goes up or down.
Yeah, I like it. I'm reading your analysis on the Facebook. It says Facebook has been building a nice higher base since gapping higher on July 14th. Even the recent weakness in stocks barely budged the stock, and today is again leading higher with a bullish outside day breaking past lateral resistance. I mean that. So you're
Right.
you're pretty much looking for, where are we going to get a little bit of a bounce here, and to the upside, what kind of percent are you looking for? Just grab a couple of points.
Yeah, I think at this point again we have to keep in mind where we are in the cyclical and from cyclical picture and from seasonal point of view. So I don't want to go all buck naked crazy on this trade, but I think something like 83, I'm sorry, 82 half, 82, something like that. You try to make about maybe 3% on a trade like this shouldn't be too difficult. And by the way, I might as well add Twitter looks very similar at the moment. So it's you have this situation here where the stock has basically showed relative strength and kind of bucked the broader market weakness over the past few days, and not including yesterday, of course. So that's positive.
So, Serge, I'd love to get some insights on this too. So, we just have Kevin McPartland on from Greenwich Associates, and he's talking a
Hmm.
lot about the electronic trading, the effects it has, and what it kind of limits in terms of liquidity, and what kind of players can be in the market. For someone such as yourself, who's been in the market trading, especially swing trading, for so long, and doing it with retail traders, what is your take on the effect to the market, and how has it shaped your strategy or trading?
I think it's a fair point, and it's obviously an important question. I mean, I can tell you, I like I said before, I sort of cut my teeth on the sell side on investment banking, and on the fixed income world, and their volume is basically dried up, and their volume was always a very big issue, and that's why, and it always kind of nagged me to see that volume was such a big issue. So like in the summer, for example, there'd be no volume in corporate bonds, right? But with this with this stuff, that's really where I really try to focus on stuff that we can really follow and understand. So if Facebook has a lot of volume, yes, there may be more or less volume on any given day, but on average, you have a lot of volume there, and it's very difficult for volume to completely dry up. So for the retail trader, as long as you're not going crazy in terms of your position sizing, it really shouldn't be an issue. I think there is an issue with that, the electronic trading and volume drawing up here and there. But that's really, if you stick with the liquid stuff that moves, that everyone wants to trade anyway, I don't think it's an issue there.
Interesting. Now, do you see, but even in the sense of the retail folks not getting involved in the markets, do you see people a lot more hesitant?
I think it's gotten a lot better. I mean, you can talk to guys, like some of the big brokers. They always release like sort of their traffic or their volume data, and they will admit that it's gotten better. But I think a lot of people are still burnt, and it just goes to the point that this bull market in stocks. Through that lens, has a lot longer to go because it's not going to end until everyone's invested again, right? And so I think you have literally a couple generations of people that are so scarred right now, that it's going to take more time for them to get big in, and volume is getting better. It's definitely getting better, but it's not where it could be or should be.
All right, I saw your daily watch list come out to your members this morning at the Steady Trader. You have KO, P, and HRB. Let's pull up on the chart and let's take a look at them. KO up first.
Oh, Coke.
Coke.
Yeah, I mean, I think if you look at the consumer staples sector right now, the consumer staples sector looks pretty solid here relative to other stuff, and I thought that Coke here, if you kind of peel back this chart, you can see it made a significant higher low in August 1st, and so it's really just kind of relative to the broader market, looking like anything like it wants to push higher rather than lower. Now I wouldn't want to get long Coke, anything below say 42.30, 42.50, but it's something I think that people can flock to here if they want to do something that's a little bit more defensive. I think it was more sort of just to kind of point to the fact that there is stuff to do if we look hard enough on the long side. That's not like something like Facebook. The consumer staples sector should, on the aggregate kind of work better than some of the other stuff if it gets bumpy, which is not to say it can't go lower, but at least you have a constructive looking chart that shouldn't get killed if the market goes down.
I actually just read an article on Benzinga saying that the Coca-Cola's company Surge comeback causes social media stir. I didn't know that. You ever had Surge?
I haven't, no, but I'm sure it's awesome.
Yeah, it's good. I didn't know they brought that back. Decent timing here with their surge in the stock price too. All right, let's jump
Right.
over to Pandora. What are your thoughts on Pandora, Serge?
Oh, sorry, I'm Pandora. Well, I think Pandora is awful. I think I'm not talking about the product. I think about the stock. I mean, I think it just looks so heavy. This is a pretty technical point of view on this thing, and I think if you look at it this more from a business perspective too, that you'll find that this company just has a lot of headwinds. Basically, it topped out there in March, and then ever since kind of slipped below all its moving average, and is now really just hanging on to a thread on a little support line that dates back to the May lows. So I think that's I think this is a stock that could potentially see meaningful downside, like 20% or so, once it actually starts getting a little bit of momentum on the downside.
All right, and wrapping up with the last one that you mentioned in your daily watch list, HRB.
HR Block. This is one that's just basically doing one of those classic gap fill trades. The stock has a sort of seasonal rhythm to it. It tends to trade somewhat rhythmically with the tax season. But if you look at they had a strong up move on the 11th of June, and it then sort of double topped through a technical lens, and then 2 days ago snapped below lateral support, and it's now really looking like it wants to go down to, let's say, $30.50, maybe 60 cents, something like that, which also coincides with a 200-day moving average and sort of the gap fill from that June date. So you have sort of a nice confluence target area that I think people can just pick off a couple percent there. So it's very, very nicely defined and tight risk reward there.
We were talking earlier about just the overall markets and how there was a ton of stocks either yesterday in the after hours or in the pre-market this morning hitting all-time highs. Facebook, Procter & Gamble, Johnson & Johnson, Costco. Where do you see this momentum market going, Serge? And with your kind of trading, does it even matter?
It does matter, and it's why I've most of the year now worked with a lot more cash than I even usually do. So I usually trade with about 40, maybe 30% cash cushion in the portfolio. All year this year, I've had about a 60+% cash cushion. Now we're up a little more than 14% year to date. I think like 14.5%, which is fine. But I think I think there that's probably why I'm up 14.5% because I know a lot of folks, a lot of my fellow hedge fund managers and other guys, they're up like nothing,
Mm-hmm.
So they're just flat or just struggling. And it's because they were way too aggressive on the long side on some of the momentum stuff or some of the more cyclical stuff like the Russell 2000, which is way underperforming this year, right? So in terms of the broader market, what do I think right now? I think the momentum stuff will ultimately come down, and it's that kind of stuff is going to ultimately come down the quickest. So something like a Facebook, when it reverses, it's going to do so very quickly. So you got to work with position sizes that are appropriate to your risk profile, which is for most people probably pretty small.
And here's an important part that Rob Hood in the chat just brought up, because so often these big price moves are not looked at in terms of, are they real, meaning is there volume? And Rob asks, regarding volume, the options volume has been massive. Does Surge see volume just increasing or returning to what it once was?
Yeah, that's a very good question. I think what I said before is really more. I'm talking about just like general volume, like because we were talking about retail volume, right? So if you look at like some of the big brokers, like they have shown an increase in volume over the past years. I'm not talking about week to week, month to month, right? That's a different story. Even if you look at New York Stock Exchange volume and stuff like that, that's a lot of that's very distorted. But some of the retail brokers, they see a lot of volume that's more real volume by you and me kind of clicking through our trades as opposed to sort of the stuff from the algorithm and stuff like that. So I don't know if it needs to go back to where it was. I think that's somewhat irrelevant. I think it's just more that the trend is higher. And by gauging, as long as this number keeps ticking up, the more I think in the bigger picture, the stock market still has higher to go if you want to look at this through a volume analysis.
Yeah, and that's what a lot of people miss right now, and it's good to see the volume come back, because I know we had a late summer started getting really slow, and the moves without the volume, they had so much volatility and so much more risk, especially for the retail traders who aren't necessarily always kind of in tune with that. So, any other?
Well, Kyle, actually, this is an important point, right? I think just a second, but I think basically, I talk to so many money managers every single day and every single week, and a lot of guys, I'm talking about literally probably half or 60% of people I've talked to, they've totally missed out on this 5-year massive, massive rally in stocks, and they're still defending whatever end of world scenario they have, and they point to your point, lack of volume, lack of this, Fed that, ECB that. The bottom line is, guys, you just missed a vertical leap in equities. What are you going to do? So I think the point of the volume analysis is that, yes, that's correct. We still have low volume, but you're still missing the point. You can't just hang your hat on some analysis that once worked and it may not work anymore, and maybe it's gonna work again. It doesn't really matter. The point is that we've had a massive move higher, and it's been very apparent if you just looked at price action, right? So I think people get caught up in volume analysis. I'm not discounting. I'm just saying the fact that if you looked at volume, you would have missed a massive rally.
Yeah, and that's a good point. People that are exiting, I mean, I've had so many stories of them getting out in 2008, 2009, and now this huge bull market that we've seen, secular bull market all the way up to today, and including, we continue to push through with momentum and hitting higher highs. I feel like it's almost every single day. Is pretty incredible. So we got about 5 minutes left here on the show. I wanted to see if you had any other tickers or stocks that we can be looking at today.
Yeah, sure. I think the biotechs just the other day, yesterday had a nice move, and I think those are worth watching. I'm talking about the big ones, right? Again, here it's all about the volume. If you pull up something like the IBB, which is the Nasdaq Biotech ETF, that thing just blasted to a fresh all-time high yesterday. After making a higher low again just a couple of weeks ago, bucking the trend, and on a relative perspective versus the broader market, it's been very bullish. You can look at things like BIIB, which is Biogen. I haven't even looked at them just now yet in the past few minutes. Yeah, down 60 basis points. But you can see stuff like Biogen, Gilead Sciences, all the big ones, they had really great days yesterday, and they've showed relative strength versus the broader market, very much like Facebook, like I just said, sort of the same type of analysis there. The issue is at some point when these things turn, they're going to turn hard. But, if in the case of like a Biogen, yeah, BBIB, and if you peel that chart back a little bit, maybe make a daily chart there, you'll see that it's basically sort of bumping into that 347 to 350 area now for the 6th time or so, or maybe the 7th or 8th time since February. And so ultimately, that will probably lead to a pop past resistance. The question is it going to be a pop and drop, or is it going to be a new leg higher? I think that'll be yet to be determined, obviously. But the point is, maybe for the more active types, which is what I assume is listening to here today, you can play the breakout, and you don't have to go crazy, but you can something like a Biogen, you can potentially play a breakout trade past say 350 for 10 $15. That's not a bad trade.
All right, Serge, always a pleasure, dude. I appreciate it. Had fun on the webinar last night teaching people about your candlestick trading. Have a great day and into the weekend, buddy.
Thank you, sir. You too. Take care.